Okay, I wanted to share one of our calls today with you. We always talk about risk reward and low risk setups. PCX, let me scoot this over. See, it was set to open here around 1540 today, closed at 1620 yesterday. So an 80-cent gap down. That put it on our radar. Excuse me. And I'm going to switch to intraday 3-minute candles and show you the call I made. Now, normally I don't call anything in the first 15 minutes. But this gave such a nice setup. You can see here's yesterday's close. You can see the big gap down. Let me try to zoom in onto that area now. Called this on what we call our reverse 3 setup. Now I didn't have time to type it in our announcements in chat, but I did say it over the mic. Everybody knew I was watching it, and did say, hey, PCX reverse 3s. And that gave us a trigger to short. Let me get my drawing tool going here. Trigger to short right below this candle at 1540, and the worst case stop above this candle 1555. There's your 15 cents risk. Okay, this is supposed to be an arrow. That's pretty sad, isn't it? 1540, worst case stop 1555, 15 cents above. And then back to the daily. From the 1540 short call, went all the way down to 1348, or actually went down to 1344. Almost a $2 move in our favor on 15 cents risk. And it's a good example, we don't pull that off every day, but it's a good example of a low risk setup like we like. And I'm also going to share with you one other thing we're working on in our chat room. Okay, these are 5-minute candles from today, COG. All right, have you ever seen a stock in somewhat of a free fall? Try that again. Like this. Okay, it's already weak on the day, and then it does this. That's one of our potential waterfall plays that we look for, and there's a couple ways to play it. One, we'll go long right here, the first break of a previous 5's high, and pull out of that what we can. Once we start paying ourselves, even if it's at a nickel or a dime, we will not let this turn into a loss. Our stop goes to break even. Okay, but then another way, you've already got a weak stock on the day. We're looking to fade this bounce. Okay, so we're going long here, but then we're also looking to fade this bounce. Meaning, if the longs can't push this up very far, and if they only have a 1 or 2 candles worth of success, we're looking to short the first break of a previous 5's low. Look how nice this was. Short right there, and a stop right there. And in this thing, one of our members did that. I don't remember if it was here or if it was on. I think it was here on the secondary. But I'll give you the numbers here. This plays out over and over again. Now, the farther it falls, I don't want to keep doing it because now it's extended to the downside. But the first sell-off and perhaps the second sell-off worked beautifully. Like in this instance, the short would be 35.13. Worst case stop 35.25. That's only 12 cents risk. And this is where one of our members did it. I remember now. The short was 34.31. Worst case stop 34.45. That's only what, 14 cents risk. And from 34.31, this thing fell all the way down to 33, again on 13 cents risk. So it's a way to, say, hey, look, I've got a weak stock. The longs just had no strength at all. I'm going to wait and see if the longs can push this up. They were only able to push, in this instance, just the 1 5-minute candle's worth. So then we look to go short first break, assuming we've got a nice narrow candle for a stop. And basically what you're doing is you're joining the shorts on a weak stock, and it gives you a nice lower setup. Does it work every time? Absolutely not. And and if this weren't a narrow candle, we wouldn't even look to take it. But when you get a weak bounce coupled with a narrow candle, so you've got a tight trigger and stop, coupled with a weak market, these things are working great for us. So just a little insight into one of our many strategies that we employ on a daily basis. So I'm going to wrap this up, and we'll talk to you soon.